Ever consider the potential value of 10 Tesla stocks in 2 years? People are starting to believe more and more these days that having Tesla stocks could end up being a terrific asset in the near future. In order to determine the value of Tesla shares by 2024, continue reading to discover why investing in the stock market is among the best methods to make money in the globe. The stock market's abundance of opportunities for profit is one of its main advantages, but this high potential reward also entails high risk, particularly for those seeking rapid financial gain. Investors should be aware that they run the danger of losing all of their investable cash if they choose to experiment with short-term or aggressive market tactics. An invaluable resource if you're looking to identify stocks that could move in the next few days or months is the industrial chain. It gives an overview of the hottest sectors, like electronics and video games. Finding stocks quickly, either upstream or downstream, allows you to concentrate on specific industrial segments more rapidly. Additionally, since segments and industries are related, you can forecast price changes more quickly without having to read a lot of research papers to understand the relationships inside a single industry. Description link. Now, it's undeniable that Tesla's stock is rising despite the inescapable obstacles. The EV company's shares had increased by more than 20,000% since going public in 2010, handily outperforming the market overall, routinely smashing Wall Street's projections and making early investors billionaires. To suggest that the rate of increase is unusual would be to put too fine point on it. The share price of Tesla soared by almost 700% last year, much to the satisfaction of the company's devoted supporters and investors who left many seasons behind. Analysts on Wall Street are perplexed as to how Tesla became the most valuable automobile firm globally following its incredible ascent. 2010 saw a price per share for first public offerings of only 17. Based on CNBC projections, an investment of $1,000 in Tesla made in 2010 would have grown to over $36,000 by February 4, 2020, over 10 years later. In contrast, over the same time frame, a $1,000 investment in the S&P 500 would have yielded a total return of slightly over 281%. As of March 25, 2022, an investment of $1,000 invested in March 2012 would have gained $14,775,587 or 14,775.59% based on calculations. This return does not account for dividends, but does take price rises into account. Comparatively, during the same period, the S&P 500 gained by 223.54, while the price of gold increased by 13.37. Analysts anticipate that Tesla will continue to rise on the other trend in the future. 10. $6,940 in June 2021 is roughly $7,500 in June 2022, or roughly 540 earnings for Tesla shares. Despite numerous forecasts suggesting that Tesla stock would continue to decline, this rise is noteworthy. This may be primarily ascribed to Musk's distinct management style and the fact that the EV company is leading the industry in both innovation and R&D. Tesla is now working on a number of exciting new projects that are highly anticipated. It appears that these projects will increase the company's income and revenue, which will have a good impact on the stocks. SD Cybertruck from Tesla. Among the initiatives Tesla is working on right now before releasing them to the public are the Starlink project and the AI robot known as Optimus. We think that the operational outlook is more promising than it has ever been. Patrick Hummel, an analyst at UBS, stated that we anticipate more absolute growth and profitability in the coming years as a result of Tesla's vertical integration in semiconductor software and batteries. He also points to high order backlogs and 2 new gigafactories in Germany and Texas that have helped further ramp up production as reasons for optimism about Tesla's operational momentum. The market continues to underestimate how much better Tesla will perform in terms of growth and profitability when compared to competition when it has successfully introduced AI programs. With Tesla at the forefront, as they were with EVs, AI will undoubtedly play a significant role in the globe. The company's stock price will undoubtedly rise significantly if this does occur shortly. Prior to the market explosion, Tesla stock was only worth a little over $100. However, it quickly doubled, tripled, and multiplied tenfold. In the event that the deployment of AI results in a repeat of the same situation, holders of 10 or more shares of Tesla stock, it is possible that their investments will treble in a matter of years. The 2021 open-source Tesla model, which predicted the value of Tesla shares at $3,000 a share in 2025, was modified by Cathie Wood LED of ARK Investment to show that Tesla shares are valued at $4,600 by 2026. Material developments, such as autonomous ride-hail assumptions and inputs, caused them to revise their position. The projection and estimates for capital efficiency have been advanced to 2026, 1 year earlier than expected. The probability that Tesla will achieve completely autonomous driving and the size of the market for autonomous ride-hailing at each price point are updated in the ARK investment model. They anticipate greater demand for autonomous ride-hailing at higher price points than initially predicted because to ARK's growing confidence in Tesla's potential to achieve full self-driving, based on their analysis of customers' perceived value of time. Although they previously believed Tesla would never need to introduce autonomous ride-hailing, they also $1,000 in 2017, when the Model 3 was ramping up, to roughly $7,700 in the previous year's model. Tesla's capital expenditure per incremental unit of capacity had improved. According to their estimates, Tesla will need to invest between $6,000 and $8,000 for every additional unit of capacity by 2025. It might be safer to assume that Tesla will spend $2,000 to $7,000 per additional unit of capacity in 2026, given that its capital efficiency is far better than anticipated. To find out the precise performance of Tesla's stock, visit Moomoo. If Tesla is successful in launching robot taxis, Lincoln Bio by 2026, the average of all 1 million simulations is the predicted value. The set simulations are extremely vulnerable to the year that Tesla eventually introduced robot taxis in a majority of the lowest price per share scenarios in the ARK. In certain situations, Tesla does not launch either service. In other scenarios, the business launches a vertically integrated human-driven ride-hailing service, but does not deploy a robo-taxi network. The company has not made a public commitment to launch human-driven ride-hailing. The strategic and tactical benefits of doing so were previously discussed by ARK. More significantly, though, is that before Tesla introduces a fully autonomous service, it may succeed in establishing a profitable recurring revenue stream for human-driven ride-hailing. Over time, ARK anticipates that its network of autonomous ride-hailing vehicles will replace its fleet of human-driven vehicles. While working toward complete autonomy, Tesla may still introduce a human-driven ride-hailing car if it is unable to establish a robo-taxi service in the allotted 5 years. According to a published article, ARK Invest feels that their Tesla model is methodologically conservative, even though it is tuned to our expectations for 2026. In 2026, we predict that Tesla's stock will behave more like that of an established business than a fast-growing one. ARK's overall price objective for Tesla in 2026 is $4,600 per share. The bull and bear scenarios in their most recent model indicate that, with the revisions, Tesla's share price in 2026 might be between $2,900 and $5,800. More analysts predict that outstanding growth in the upcoming years will cause the Tesla stock to soar another 50%. Furthermore, despite a sell-off, many Wall Street analysts are nonetheless bullish about Elon Musk's electric vehicle company's enormous upside potential for future growth. Nonetheless, over half of Wall Street analysts who follow the stock are still upbeat about Tesla's long-term growth prospects and predict the company will continue to rule the rapidly expanding electric vehicle market. Retail early in June, Garrett Nelson, vice president and senior equity analyst at FAR Research, reaffirmed Tesla's status as a strong buy and set a price objective of $1,200 per share based on the company's potential for long-term growth. However, it is crucial to remember that these forecasts and presumptions could alter in response to changes in the economy, which would then have an impact on stock and market values. Because these forecasts came from professionals with a track record of success in the field, they should be taken into consideration. Their assessments and forecasts are the result of their individual in-depth analyses of the data that is currently available, careful evaluation, and in-depth analysis of the movements of the Tesla stock, as well as recent innovations of the EV company overall. Tesla's largest, even though those side projects haven't yet paid off. Bulls place a high value on Tesla's potential to generate revenue outside of the auto industry. They believe that software advancements like Tesla's eagerly anticipated fully autonomous driving mode, as well as future autonomous taxi services and energy storage units, could enable the company to achieve previously unheard-of profits in the automotive industry, justifying its current exorbitant valuation. Please remember to subscribe to our channel. We'll make sure it's worthwhile.